Hello everyone. Well, summer's lease hath all too short a date, as Shakespeare said. Larry Summers withdrew his candidacy for Fed chairman over the weekend, making it more likely that Fed Vice Chair Janet Yellen will be appointed when Chairman Bernanke steps down. She's known to favor the current quantitative easing system and to be more concerned nowadays with growth rather than inflation, whereas Summers, the former frontrunner, was thought to be more in favor of cutting back on the quantitative easing program, if indeed his views on the topic were known at all. Thus, when it comes to time to begin raising short rates, which will come eventually, Yellen may be more willing to err on the side of caution than Summers would have been, and therefore interest rates are likely to remain lower for longer under Yellen than they would have under Summers. Naturally, with the U.S. interest rate expectations changing so much, the dollar was lower against almost all the major currencies in trading early this morning, except for the Norwegian krone. However, that time, afterwards, the dollar has rebounded slightly in later European trading. In that respect, the change may further the shift in outlook on relative monetary policy that we've been seeing recently. For some time, the dollar story was one of divergence. U.S. monetary policy alone in the G10 shifting towards tightening, whereas the other central banks were either neutral or still retained an easing bias. Now, with New Zealand already adopting a tightening bias, Norway poised to do so later this week, maybe, and the market already pricing in such a change in the UK, this policy divergence has changed into policy convergence. That's not likely to produce as strong a dollar as we were expecting before. The change is particularly evident today in the emerging market currencies, which have generally strengthened against the dollar. My recommendation in all this is to avoid the turmoil in the dollar and instead put on cross-currency trades that will benefit from these shifts in view on monetary policy divergence. I like buying the New Zealand dollar against the yen or Aussie yen, selling Aussie New Zealand, and selling Euro Noki. Meanwhile, another potentially even more serious event is going largely unnoticed today: the typhoon that just hit Japan. Typhoon Mai hit central Japan Monday, landing in the middle of the main island shortly before 8 o'clock in the morning local time, 2300 GMT Sunday. The typhoon is packing winds of up to 160 kilometers per hour and bringing what's called unprecedented rain to parts of Japan. Over 500,000 people were advised to evacuate their homes. Now, what's particularly worrisome for other countries is that the typhoon is expected to hit the northeast, including the Fukushima area later today. The Japan Meteorological Agency has issued a warning for the area around the Fukushima plant, which already has enough problems dealing with the nuclear power plant there. This is serious stuff that doesn't just affect the FX market, it could affect the future of mankind. This is another reason why I'm bearish on the yen over the longer term. I don't think they've solved this problem, not by a long shot. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.